Good morning, I'm Nathan Hager.
And I'm Karen Moscow. Here are the stories we're following today.
The drop in stocks comes on more disappointing economic news out of China. An industry survey shows China's services sector saw its slowest growth this year in August. Meanwhile, China's Country Garden Holdings has averted default on its dollar debt by paying coupons on 2 bonds within their grace periods. We get more on the troubled developer from Bloomberg's China credit editor Kevin Kingsbury in Hong Kong.
Certainly, it takes a worry off the table right now that they've made these $22.5 million worth of payments. Comes on top of extending a yuan bond by 3 years over the weekend and making a separate payment of about $600,000 on a offshore bond as well. So it kind of shows that we were even talking about a payment of $600,000. It would sound like peanuts, but it just shows just how much worry there has been about Country Garden, that each and every payment has gotten some increased scrutiny as to whether or not this company is going to be able to survive and be able to get through this rough patch here without any defaults.
Bloomberg's Kevin Kingsbury says the payments buy Country Garden time as it tries to sort through $187 billion of liabilities.
Meanwhile, Nathan, Bloomberg Economics says China may never eclipse the U.S. as the world's biggest economy. Their forecast shows China's GDP may briefly surpass that of America in 2040, but even then, it will happen by only a small margin before falling back behind. Before the pandemic, the expectation was that China would be the leading economy by the start of the next decade.
And staying with the economy, Karen, one major Wall Street firm thinks the U.S. may avoid contraction. Let's get that story from Bloomberg's John Tucker. Good morning, John.
Nathan, Goldman Sachs has grown more confident the U.S. can skirt a recession. They've lowered the odds to 15% from 20%. So why the change? The firm's chief economist, Jan Hatzius, says, among other things, solid job growth will boost wages. At the same time, he says cooling inflation may keep the Federal Reserve from raising interest rates any further. Hatzius says a September rate hike by the Fed is off the table, and the hurdle for a November hike is significant. Goldman's 15% recession estimate, well below a Bloomberg consensus of 60%. The firm is also more optimistic than peers in U.S. economic growth, predicting an average 2% pace through the end of next year. In New York, I'm John Tucker, Bloomberg Radio.
All right, John, thanks. Well, another call out of Goldman this morning, this one on the equity side. Strategists led by Peter Oppenheimer say AI is not a bubble, saying the rally can continue. Goldman names 11 U.S. stocks as near-term beneficiaries of the AI revolution, including NVIDIA, Microsoft, and Meta.
Well, Karen, a big payday's in store for bankers working in one of the year's most highly anticipated IPOs. Sources tell Bloomberg investment banks working on ARM Holdings' initial public offering are set to share upwards of $100 million in fees from the chip designer's listing. The SoftBank-owned ARM is poised to pay the banks 2% of the $5 billion it's seeking to raise in the IPO.
Well, Nathan, we may have a takeover in the works. Bloomberg News has learned private equity firm Thoma Bravo is in advanced talks to buy health records software company NextGen Healthcare. NextGen, which rose 6% on Friday, up another 10% in early trading.
2 stocks being added to the S&P 500 are also on the move, Karen. Both Blackstone and Airbnb are up more than 5%. The two will replace Lincoln National and Newell brands prior to the start of trading on September 18th.
Well, let's turn to Washington now, Nathan, and some news on Jill Biden's health. The White House says the First Lady tested positive for COVID-19 yesterday. The president was tested last night and came back negative. President Biden is set to attend the G20 summit in India this weekend. The White House is not saying whether the First Lady's diagnosis will affect his travel plans.
Well, meantime, Karen, Elon Musk is blaming the U.S. Anti-Defamation League for the slump in advertising revenue at his social platform X. We get that story from Bloomberg's Ed Baxter.
Ad sales are still down 60%. Musk posting primarily due to pressure on advertisers mounted by ADL. He, in a series of posts, says it has been, quote, trying to kill the platform since he bought it, falsely accusing it and him of being anti-Semitic. Musk says it is a pro-free speech platform, but against anti-Semitism of any kind. He says he is as well. He says legal action is an option. In San Francisco, I'm Ed Baxter, Bloomberg Radio.
All right, Ed, thanks. So we now turn to labor unrest overseas. Chevron's liquefied natural gas workers in Australia are threatening 2 weeks of 24-hour rolling outages at 2 major export plants. It's an escalation of a dispute that is threatening global fuel supply. We caught up with Colin Parfit, Chevron's vice president of midstream at the Gas Tech conference in Singapore.
we're committed to find a solution there, and we want to find a solution that's a win-win-win. We want to find it as a win for Chevron, a win for our employees, and a win for the gas markets.
And Chevron's Colin Parfitt says the company has not canceled or delayed any LNG shipments as a result of the strike threat. All right, Nathan, thanks. And time now for a look at some of the other stories making news around the world. For that, we're joined by Bloomberg's Amy Morris. Amy, good morning.
Good morning, Karen. Congress returns to Capitol Hill today after its summer recess, facing a possible government shutdown in just a few weeks. Paul Helmke is a professor of practice at the O'Neill School of Public and Environmental Affairs. He's also the founding director of the Civic Leaders Learning Center at Indiana University.
In order to avoid a government shutdown, we need to have our elected representatives start thinking about the common good and majority rule, and the importance of the budget rather than fighting out their fringe partisan agendas.
Professor Helmke says current partisan rancor in Washington makes it highly likely that there will be no continuing resolution, much less a full budget. A heat wave is expected to bring 100-degree temperatures to tens of millions of Americans this week. It is likely to be between the lower and high 90s today in places like Philadelphia, Washington, D.C., New York City, and Chicago. D.C. and Baltimore are under hot weather emergency declarations through Thursday, and a heat advisory is in place in New York City through Wednesday night. It's been about 17 months since Republican governors from Texas and Arizona started sending thousands of migrants to D.C., Los Angeles, and New York City, along with other cities, in protest of President Biden's border policies. The Washington Post reports there are more questions now about short-term shelter as those buses keep coming. SAMU First Response says D.C. has received about 60 busloads of asylum seekers since May, raising the total number of buses sent to the district in the past year to 239. In New York, State Attorney General Letitia James is calling for coordination between federal, state, and city officials. New York Governor Kathy Hochul and New York City Mayor Eric Adams have been exchanging letters in recent weeks, but Letitia James says that doesn't help.
The letters, the accusations, the recriminations don't serve anyone. And what we really need is someone to coordinate. And so I would urge everyone to get together in a room or on a Zoom call to appoint a migrant czar.
More than 100,000 migrants have arrived in New York City over the past year, with more than half of them overwhelming the city's shelter system. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Amy Morris. This is Bloomberg. Karen.
All right, Amy, thank you. It's time now for the Bloomberg Sports Update. For that, we bring in John Stashower. John.
Karen, it was a busy week one of college football. The entire preseason top 25 playing over a 5-day span. Mostly no upsets. There was a big one Saturday when Colorado won at TCU. There was also an upset last night.
Leonard from the shotgun takes the snap. Quick look to the left. Tucks to run straight ahead, trying to break a tackle. He does! He's got a first down and more! 30, 20, Leonard! Touchdown! My goodness! And the Blue Devils have the lead!
Learfield Sports, the call. Duke upset 9th-ranked Clemson 28-7. It's the Blue Devils' first win over a team ranked in the top 10 since 1989. U.S. Open saw top seed Carlos Alcaraz advance to the quarterfinals, a straight-set victory. Alex Zverev won his match over Yannick Sinner at 1:40 a.m. New York time. The match went 4 hours, 41 minutes. Two upsets on the women's side. Third-seeded Jess Pegula trounced by a fellow American, Madison Keys, 6-1, 6-3. And Ons Jabeur lost to Zhang Qinan 2-4. Baseball saw Baltimore beat the Angels 6-3. The Red Sox won 7-3 at Tampa Bay. They had lost their last 13 games at Tampa. The Giants were shut out by the Cubs 5-0 as Cub pitcher Justin Steele improved to 16-3. 8 innings, allowed only 2 hits, struck out 12. The A's lost at Toronto 6-5 in 10 innings. Also, Minnesota won at Cleveland 20-6. John Stashower, Bloomberg Sports.
From coast to coast, from New York to San Francisco, Boston to Washington, D.C., nationwide on SiriusXM, the Bloomberg Business app, and Bloomberg.com. This is Bloomberg Daybreak.
Good morning. I'm Nathan Hager, and we are heading into a holiday-shortened trading week with losses for stocks pretty much across the board around the world. Yet more weak economic data out of China, this time in the services sector, is putting a damper on sentiment after a week that saw the S&P 500 rise 2.5% on encouraging economic data for the U.S. So let's get this trading week started. We're joined by Lori Calvasina, the head of U.S. Equity Strategy at RBC Capital Markets. Lori, it's great to speak with you as always. What does ongoing weakness in China mean for investments here in the U.S.?
Hi, well, thanks for having me as always. And look, I think there are two issues whenever we see, sort of weakness in China. Is one, what does that mean for U.S. equity markets from a flow perspective? China was one of the hot trades to start the year. There was a lot of negative views on the U.S., and we've really seen that reverse, in recent months. Unfortunately, we're not getting those inflows into U.S. equity funds, especially on the large cap side right now, so we'll need to watch that. But secondly, what are the spillover effects into the U.S. economy? And right now, the vote seems to be that they'll be minimal. The U.S. economic outlook seems to be improving if you look at some of the calls that are being made around the street today, while the view on China and even Europe, frankly, seems to be softening. So I think those are really the two, kind of cross currents that are somewhat conflicting that we have to keep an eye on.
I would be curious to get your call, what your team at RBC are thinking, particularly now that we've gotten this call from Goldman Sachs that the chance for a recession in the U.S. is now down to, 15%? Are you that bullish?
Well, it's interesting. We watch the Goldman call. They're certainly quite prolific and vocal, and I think they've had sort of a good sense of where things are headed in terms of broader sentiment. But we've also been watching very closely that consensus data point tracked by Bloomberg, which has been sort of stubbornly stuck at the 60% level and not moving, even though the news flow around the economic discussion has been improving. So I'm not quite sure what's going on with that latter data set, but I do think this call today is interesting. I have the luxury of being a U.S. equity strategist, not an economist, so I make calls on the market as opposed to that GDP forecast directly. But what I do tell clients is it feels to me, and, this is something we were saying early last year, this really smells more like 2015, 2016, where the economic damage may not quite end up being a recession, maybe something, sort of a cousin to a recession. But regardless, my job is to call the equity markets, and I think we priced in a recession last October. Whether or not we get one still remains to be seen, but I think we paid the price for one that we may not even end up getting.
So where do you see the momentum for stocks at this point with the way that the economic backdrop looks right now?
So I think that stocks are at an interesting point. We've noted, similar to some of my other competitors on the street, that sentiment has gotten a little bit stretched over the summer. That's something we haven't liked. The appeal of stocks relative to bonds has been worsening, and that has actually been showing up in the flows, which is a little bit of a concern to me, especially heading into sort of a seasonally tough period of the year. The last 5 or 6 years, August through October, has not been a friend to the U.S. equity market. That being said, the economic narrative does seem to be improving a little bit at the margin. I think that the conference season that we're heading into now post-Labor Day has historically proven very, very valuable to investors because we can get answers to some extent to questions on whether or not those spillover effects from China will end up influencing the U.S. We know from the last reporting season, and really the one before it, that whatever this is economically, we are starting to see pockets of weakness in certain parts of the consumer, certain parts of the corporate psyche. How bad, that is really getting, I think, is going to be a key topic in this conference season the next few weeks.
I know one aspect of the market that you watch pretty closely is the impact of politics. We do have the prospect of a government shutdown at the end of this month. Is that something that you're concerned about? Is that something that you're warning your clients about?
We've been talking a little bit more about the election than the government shutdown. And frankly, we've been getting more questions on the election next year than the government shutdown. But I do think, we are starting to hear more rumblings about this potential shutdown just over the last week or so. And in a context in which, you sort of enter into, again, this seasonally kind of tough period for markets, it's definitely something to keep an eye on. I do think that equity investors tend to think when these issues come up that it will go down to the wire, it will get resolved at the end. So you really, probably won't see it take too much of a hit until you really get close, to that particular, date of stress. But it is definitely a concern.
This is Bloomberg Daybreak Today, your morning brief on the stories making news from Wall Street to Washington and beyond.
Look for us on your podcast feed at 6 a.m. Eastern each morning on Apple, Spotify, and anywhere else you get your podcasts.
You can also listen live each morning starting at 5 a.m. Wall Street time on Bloomberg 1130 in New York, Bloomberg 99.1 in Washington, Bloomberg 106.1 in Boston, and Bloomberg 960 in San Francisco.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130.
Plus, listen coast to coast on the Bloomberg Business app, SiriusXM Channel 119, the iHeartRadio app, and on Bloomberg.com. I'm Nathan Hager.
And I'm Karen Moscow. Join us again tomorrow morning for all the news you need to start your day right here on Bloomberg Daybreak.